Are you looking to get really great stats when it comes to economic data for housing? Perhaps you're an investor looking to hone in on specific areas and track your market. Or maybe you're a researcher at a university and you're looking to acquire data that you can use for predictions. Well, I'm going to show you how to do this using Zillow's research data. My name is Ariel Herrera with the AnalyticsAriel channel, where we bridge the gap between real estate and technology. I am a huge data geek. I love finding new resources and sharing them with you. So if this is the type of content that you enjoy, please subscribe to our channel. So that way you always have the latest content. As well, like this video if you want to continue to see more content like it. All right, let's get started. Right now, I'm on Zillow's research data page, and they provide lots of interesting data that could be utilized for various resources. So on here, they have housing data that relates to home values, which comes from their estimates, values forecasted, rental data, and this can be for different types of geographies, such as metro areas, as well as even granular to zip codes. Inventory, list and sale prices, sales count, and price cuts. So what we're going to do is just walk through a few of these together and see how could we actually utilize this data. So first, let's look into inventory. It's pretty easy to understand what inventory metrics are. So there's a couple here that they specify. They have for sale inventory, so how many unique listings at a given time were active in a month. Then they have pending listings as well as days to pending. For us, we're just going to look at for sale inventory. So this is what's available in the market for a month. Now what's great is they have several different resources. We could look at all types of homes. This includes multifamily properties as well as single family properties. We could also look at just single family. We can have two different views, a monthly view as well as a weekly view if we want to get more granular. As well, we could look at it based on raw as well as smooth. Now, I believe the difference is that because in the winter time, there's usually less inventory and this is cyclical, that this smooths it out. In our case, we're just going to look at for sale smooth all homes, the first one, and we're going to select the Metro and US and hit download. Now you should see an Excel sheet pop up where you have dates starting from 2018. And in this case, we're looking at it on a month-to-month basis. Let's highlight the first row, click data and filter. I'm going to look at Florida. And I could see there's data on some of the major markets such as Miami, Tampa, Orlando, Jacksonville, and so on. What I'm going to do next is copy the data from cell C all the way to the end and place this into a new sheet. Then I'm going to do a quick chart. If we go to Insert, hit Recommended Charts, select the second one, and it's going to give us a really good overview of what this data looks like visually. As we could see, there's a lot of numeric values in the spreadsheet, but the best part about visualization is that you can get quick context. Let's look at the data in another way. If we go to Change Chart Type, select Line, and click 2D, we could see it in another way. We see that Miami, Florida actually does have the largest drop-off than the rest of the areas. One of the reasons could be that Miami is a well-known city. A lot of people who are moving to Florida are choosing to move to a city that they already know on the East Coast. And it also has the appeal of nightlife, beaches, and businesses. So this gives us really good idea quickly of just plotting what the inventory looks like per area. How we could use this data perhaps is understanding our market. Is this actually abnormal with the data with the inventory decreasing? Is it an outlier in comparison to other major cities? These type of questions that we can answer using data. So let's click out of this and go on to look at another one. So Zillow has their own index that's supposed to measure the typical home value in a given region, and they call this ZHVI, Zillow Home Value Index. They also give some really great resources if you want to dive deeper on the methodology, as well as where to locate the API directly. The API is just a programmatic way of acquiring the data versus what we're doing here, which is manually downloading it. So for ZHVI, they do have different subsets where it's single family, condo, co-op. They have also broken out by type of bedrooms. So we're going to select 3-bedroom. And for geography, it gets more granular than the prior one. So we have metro US, state, county, city, zip code, and neighborhood. In this case, I'm going to select city. Just note, if you do select zip code, because there are far more zip codes than cities, because one city can have multiple zip codes, your file will be larger and that may take a little longer to download. Let's hit download for this. All right, what I'm going to do next is filter again. What we have is a region, the metro area, county name, and then we have data going across from 1996 all the way through to current date, which is for the end of April. So now let's select a state to look at. I'm going to focus in on New Jersey here. Next, I'm going to select county name as Monmouth County. On the left-hand side, there's a size rank. So I'm going to select the first 5 counties. And I'm copying that over into a new sheet. So these 5 counties I'm pretty familiar with. They are counties in Monmouth County, which is a middle class and up area. Now, if we select from column C all the way down, we can go to Insert, Line Chart, 2D Line. Awesome. So now we can get some context here of the prices for each of these areas. From what we could see, they're all rising as of 2012, which makes sense. There was a decline after the financial crisis for properties, and home values have gone up with low interest rates over the last several years. And from what we see starting around the end of the winter of 2020, there's a large increase, which is actually a little bit more abnormal than from what we've seen in the past. And this is for similar reasons, as I stated earlier, due to COVID-19, low interest rates, and less sellers than buyers. So say if we want to build a predictive model for future home prices, we could use this historical data on many different levels for the region, for the state, for the zip code, and more. This could give us really good context as to how our city that we're investing in is performing against similar cities. And it could also give us a view, are there any outliers that are performing really well that we may want to look into investing in? Great, so you just got a really good overview as to how to use Zillow economic data. And if you want to take a step further into actually automating looking at for sale properties and evaluating them against some metrics like cash flow, I highly recommend for you to check out my course, Real Estate List Building Automation. We go step by step. We get to use really cool tools like Zapier, Python, and Plotly Dash. So don't miss it. Click the link below. And if you haven't already, please subscribe. Thanks.